So that's a good segue into my next question. And that relates to the steel industry. It's recent news that Cleveland Cliffs put their bid out for U.S. Steel, followed by oh, what was that private company's name? It just slipped my mind. And then ArcelorMittal is considering putting out a bid. I don't think they're going to, given their divestiture of United States steel production a few years back, but it just may come to fruition given how much the politics have changed with the IRA, the CHIPS Act, and the Inflation Reduction Bill, or that's the what's the other one? The Infrastructure Bill. Excuse me. So, my question is, do you see any bright spots if that merger were to come to? Do you see any antitrust issues with the concentration of, you know, um, flat rolled sheet steel, blast furnaces, and things of that sort? Or do you have any opinions on that? And do you expect it to potentially be inflationary, given how dependent a lot of these renewable resources are on steel? I think it was something like 150 tons of steel required to build a windmill or 1 megawatt of wind
Wind
power.
turbine, yeah, the stem of the
Yeah,
wind turbine, yeah. Yeah, I would
there
say
we
to
go.
the narrow question of antitrust, I do think that the FTC is looking for a few wins and a scalp or two, and so there might be some risk. I'm not sure what the ARB looks like post announcement and whether there's a sufficient spread to capture that risk. I think the market will tell you long in advance, as you know better probably than most. But to the broader question of critical commodities, and steel would certainly be among them. These are the industries that have been overlooked, that have very low multiples, that are forming sort of at the forming phase of being sort of the modern tobacco companies in the next 10 to 20 years. They produce an enormous amount of cash. A lot of allocators and the people they allocate to can't own them, which means that you should own them for dividends and reinvestment and liquidity events like takeovers, as opposed to hoping to get a greater fool's trade and get a multiple uplift. I do think that, if you had the courage to buy struggling coal companies in the months after the COVID lockdowns, you would have made a career making trade, plug your nose and count the money. And I think that's what we're seeing across a variety of commodities. If you just look at the BCOM index compared to the QQQs, that ratio is still barely off the mat, as Tony, more than anybody, Tony Greer would probably talk to you guys about when he appeared with you. And I do think that our view, by the way, we have a trading philosophy, which is we earn money in fiat, which is a recognition that we live in a US dollar world. We save money by buying real assets like gold, silver, land, and collectibles. And then we invest privately where we can affect the outcome and create our own sort of sweat alpha, as we call it, where we can interface with management and help them create. I do think there's going to be enormous opportunities in the commodity sector to take things private, because the market is not rewarding the cash flows in the same way that they would reward a cash flow at Meta or at Google, or pick your favorite market darling, or at NVIDIA, presuming they have any cash flows of consequence. Um, the private markets are going to be where I think you could see, as an investor, disproportionate returns, which of course is different than trading. But yeah, I think this particular merger, the FTC has suffered a couple of setbacks. Particularly, I think they've been a bit depantsed in the Microsoft case recently, and they might be looking for a scalp, or they might be timid. It's hard to say. I would take a look at the ARB, and I would respect what the market is saying, but to be honest with you, I've not looked at it ahead of this recording.
Absolutely. Yeah, and I feel like if Lorenzo wasn't so forefront, and I'll just call it analyst bashing in the early, I guess in 2020, he wouldn't have much of a public image outside of the institutional investors. Um,
He doesn't
and
make for
yeah,
the most sympathetic of CEOs, that's for sure.
no, I just love listening to him on the calls. I think he's tamed down in the last
Yeah,
year
yeah,
or so,
yeah.
but it was definitely worth listening to. Um, and then just kind of discerning further on that point, if let's say the merger were to come through, they were in total control of the United States blast furnaces. Um, and just assuming what he describes as having higher quality steel based on utilizing hot bricked iron or virgin to create virgin steel, he pretty much would be the only producer of this higher quality steel in the United States now, if it were to go through, and essentially have pricing control. He would be able to, turn off and on furnaces to his own whim, with the understanding that these aren't necessarily meant to be turned off and on, but he has the potential to be able to do so, and basically have more control on the price of steel that he personally has been trying to drive to a higher price to benefit Cleveland Cliffs and shareholders. So, um, I guess with that backdrop, do you think this could be highly inflationary, or do you think there's going to be some sort of like price controls put in place to where he can't just have total power over volumes and pricing?
I would I would caution by starting my answer by saying that I'm far more familiar with the coking coal market than I am the steel market, even though coking coal feeds into steel for a variety of reasons and an accident of history or two. It's just an area that I've studied more thoroughly. I would say that the key phrase that you mentioned was U.S. market share, and steel is, of course, a globally traded fungible commodity with a massive amount of production in India and China. And in fact, I'm not sure what the current state of tariffs are with respect to Chinese dumping of steel, but there's lots of toggles to be played to minimize the monopolistic aspect of the potential merger, which is undoubtedly what they will argue as they try to get the merger deal done. And so it might actually benefit the U.S. to have a unified point source player that can compete on the international stage in a way, as opposed to having everybody undercutting each other as China, burps onto the market excess steel in a way to try to gain global market share, which is, from my personal experience, what they must be doing in the steel market, which is what they did in the solar market when I was in it, and they took over polysilicon production. So I think that there's probably a case to be made that the monopolistic assessment shouldn't be national, but it should be international. And if I were advising Cleveland Cliffs, this is the points that I would be making. Again, not having studied the situation as carefully as you have.
Yeah, and that's primarily why they were pushing for being a global competitor and